Part 2 of our accounting starts with Chapter 9. It's accounting for a merchandising business organized as a corporation. The business is 3 Green Products, Inc., the business in Part 2. It's a retail merchandising business organized as a corporation. It rents store space in a shopping center. 3 Green purchases and sells a wide variety of environmentally friendly products, from light bulbs to cleaning supplies. Purchases are made directly from businesses that manufacture the items. In Chapter 9, we are going to do the daily transactions of a merchandising business when purchasing merchandise for cash and on account. We're going to post to the general ledger and accounts payable subsidiary ledgers that helps the business update their account balances. So the first section in Chapter 9 is the subsidiary ledgers and controlling accounts. We're going to distinguish among service, retail merchandising, and wholesale merchandising businesses, identify differences between a sole proprietorship and a corporation, and explain the relationship between a subsidiary ledger and a controlling account. Goods that a business purchases to sell are called merchandise. A business that purchases and resells goods is called a merchandising business. A merchandising business that sells to those who use or consume the goods is called a retail merchandising business. A wholesale merchandising business buys and resells merchandise primarily to other merchandising businesses. A corporation is an organization with the legal rights of a person which many persons or other corporations may own. The assets or other financial resources available to a business are called capital. Each unit of ownership in a corporation is called a share of stock. The owner of one or more shares of stock is called a stockholder. The total shares of ownership in a corporation are called capital stock. The Articles of Incorporation, a legal document that identifies basic characteristics of a corporation, is a part of the application submitted to a state to become a corporation. A state approves the formation of a corporation by issuing a charter, the legal right for a business to conduct operations as a corporation. A business from which merchandise, supplies, or other assets are purchased is called a vendor. A ledger that is summarized in a single general ledger account is called a subsidiary ledger. Accountants often refer to a subsidiary ledger as a subledger. The subsidiary ledger containing vendor accounts is called an accounts payable ledger. An account in a general ledger that summarizes all accounts in a subsidiary ledger is called a controlling account. You'll notice there's all the accounts payable ledgers are all the names of the vendors, and the controlling account for those are accounts payable. Accounts payable increases with a credit, decreases with a debit. Subsidiary ledger form. The vendor accounts have the date, the item, post-reference column, debit, credit, and credit. The accounts payable ledger has the date, item, post-reference, debit, and credit, but the balance has both a debit and credit. You put the account name for the vendor and the account number, date, balance, check mark in the post-reference, and whatever the balance is in the account. What is the primary difference between retail and wholesale merchandising businesses? A retail merchandising business sells to those who use or consume the goods, like yourself. A wholesaler merchandising business buys and resells merchandise primarily to other merchandising businesses. What allows a corporation to own property, incur liabilities, and enter into contracts in its own name? Corporation, through the rights granted in its charter, has the legal rights of a person. What is the principal difference between the accounting records of a proprietorship and corporations? Proprietorships have a single capital and drawing account for the owner. A corporation has separate capital accounts for the stock issued and for the earnings kept in the business. What is the relationship between a controlling account and a subsidiary ledger? The sum of the subsidiary ledger accounts is equal to the balance in the general ledger controlling account. What column on a general ledger form is not on an accounts payable ledger form? The debit balance. That's the end of 9-1.